U.S. housing starts, an update. It's February 17th. I'm Rich Positive Critical Point. A little while ago, we got some data off the FRED system at the St. Louis Federal Reserve here, recent numbers for the new privately owned housing units started. So the number of homes are starting to build, okay? And what I want to show you is a rather simple business cycle that occurs about a decade for the economy, and real estate and stock market align themselves with that. There is a correlation to it. Stock market has the best correlation to it. But look at this here. These gray columns are actually economic recessions. The U.S. economy was in a recession, okay? And notice that new housing starts peak out generally well ahead of a recession, okay? But also notice this: booming economy and a boom in housing. Bust in economy, bust in housing. Boom, bust, boom, bust, boom, bust, boom, bust, and boom, bust, and we're in a boom phase now. This bust was a super cycle. Towards the end of this decade, we can get into some super cycles that are more important for the stock market and economy than real estate, but real estate can be dragged lower because of the economy and stock market. But the business cycle model is suggesting the economy ought to grow to near the end of this decade. Housing and real estate home prices could peak out a little bit ahead of the peak in the economy and stock markets, but that still implies several years of the economy growing with also real estate being supported. Not necessarily in how high prices can go, because we've really seen a surge in prices. We've seen a surge in the cost of building homes, and the inflation is high, and now our interest rates are going up, which will probably help cap how high a price is. But what can occur later this decade if prices come back, and we think prices will be down a bit for commodities and real estate around mid-decade, but the volume of business may be higher still, or it just stalls out a little bit and then higher still later this decade. So our forecast from this business cycle model is that housing starts are likely to be supported, if not higher, into 2024, maybe 2024, 2027. We get a bit of a hiccup, some complications and problems, but then may still be higher a little bit later. But we do want to, as it comes near the end of the decade, we do want to consider housing, real estate can top out ahead of the economy and stock market. In the meantime, that we want to be bullish of this kind of data as supportive of the economy. And we're already bullish economy, but as we look at individual inputs to that, we like what we see. So yes, we've made a forecast for this particular data for housing starts to be supported, meaning it stays at these levels, might fluctuate around, dip a bit, move up a bit, sideways to higher in coming years, at least into 2024, if not all the way into near the end of the decade. And we don't see a reason to change that, even with some of the negative talk of things that might go wrong here for the economy and this and that. It is possible interest rates can move up high, fast enough, high enough to kind of provide a headwind to this data, but we're not coming up with an information that housing is going to do something bad that's actually connected to bad economy. Housing can back off, but the economy is likely to continue to grow. In short, what the model is saying is there's no sign or evidence here of why we would want to look for an important top in housing numbers, that's years down the road, that this data since 2010, since that financial crisis, that super cycle bottom, this data has been doing what it's supposed to. We were due for a recession then, and it turned out to be the shortest on record, okay? And we were due for a bear market in the stock market, shortest on record, but a lot of drama, okay? Down 35% or something like that. Real estate, the whole housing market, of course, came to a standstill. Very few homes built compared, as we can see, here to here. But we can see it's fully recovered and moving higher now. And the economy, dollar-wise, volume-wise, size-wise, ought to be at record large right now. So we have more than recovered. Okay, we're moving forward. Economy's growing. The recovery's over. Okay, so at any rate, I just wanted to give you an update here that as far as forecasting this data, yes, we're bullish for a while yet, and we're not seeing signs of why there would be any kind of coming disaster. This is not a high enough number to be a bubble like it was back in the 2000s. We're not looking for a bubble in real estate. Okay, this is normal business. And we're viewing this as input into our economy, saying this is normal business. We're proceeding on the timeline, the project management line, if you will, of growing an economy. Things are good. It's working. Okay? Now, what else can I tell you? It does seem about every other decade, real estate moves up farther and faster in the other decade, but then later also falls farther and faster. In fact, it will be more in line with a recession. Whereas the decades in between, when real estate didn't rally so much in terms of prices, it also didn't fall back so much by the recession and sometimes paid no attention to the recession. Yes, near the end of the decade, real estate will probably pay attention to the recession because we've had that every other decade surge higher in prices here last year and still hanging in there this year. Okay, so yes, there will be complications and problems down the road, but it looks like it's quite a ways away. And it looks like people are going to still build homes even though we have higher interest rates. I mean, look at this. In the 1980s, interest rates were surging. Paul Volcker was jumping interest rates to try to kill inflation and also killed the economy. But look how well the economy can come roaring back out of, 1981, 2, 3, somewhere in there, out of a recession. And we built a huge amount of homes early in the economic cycle. All right, well, we've had a good recovery here too early in the economic cycle. This is providing supporting evidence we're probably going to be right. The economy is going to continue to grow to near the end of the decade. We're early in that growth phase. But the point is, we've had other times like this decade here in 1990s when it actually topped out near the end of the decade, meaning we can still have rising housing numbers, building more homes. For quite some time yet. We like the data, we give it a thumbs up, and we give it a 2 thumbs up for the future for our economy. Most of the bad news is probably just going to create buy the dip moments in some of the markets. Past results are not necessarily indicative of future results. Thank you. If you're not yet a subscriber, go to criticalpointpod.com and you should be able to click on a login or subscription button that will take you over to the podcast site. We put out a few free podcasts from now and then, but you'll want to be a subscriber to keep in line with what we're looking at for this decade for the economy, super cycles even of the economy and the stock market, as well as what's going on in a day-to-day business for stock market, interest rates, a few selected commodities, gold, and those kind of things. And we do monitor real estate. Thank you.